Welcome to Protea Weekly. We have a little bit of a spicy one this week. Shifting away from the wine stuff, I've got a lot of articles on my LinkedIn. If you want to know more about wine, go find them there. But this week, we're getting back to accounting. And in the last sort of 10 days, there has been a lot of drama. And no surprise, Intuit is at the center of it, and people are upset. Rightly so? Maybe. I think people heard what they wanted to hear, not really what was taking place. This is a tricky topic, right? I sort of get Intuit's a business, they gotta make money. The accounting portion of their business is actually pretty small. When you get into the stats, there's a lot more people using QuickBooks that don't have accountants than people using QuickBooks that have accountants. But there's a little bit of confusion, misinformation, hoping, I guess, from some accountants, and things got a little bit crazy. But it all started with a little bit of a note that told everybody that the free trial of QuickBooks' new platform called Intuit's Accountant Suite will stop being free to all users to try, and the paid portions of the subscription will kick in May 2026. This got people upset because in their minds, they believed it would be free through 2026. Now, I can understand where the confusion came because the note that was shared at Intuit Connect and on other platforms is that QBOA, QuickBooks Online Accountant, that platform that we all know and love and complained about a million times, will sunset December 2026. And I think a lot of us grabbed that idea of December 2026 as the date everything will happen. But no. So that's the date when QBOA disappears and you will be forced to migrate to Intuit Accountant Suite Core being the free platform. With the new IAS, there will be a paid portion of it. There will be the core plan, which is the equivalent of the current QBOA with functionality, but it has been modernized. Allow you to manage clients, access files, assign users, run workflows. If you do not make a move before September 2026, you will automatically be moved to this core plan in 2027. There is also then what they are calling the Accelerate plan. This is the paid plan, and this will start from $149 per month beginning May 1st, 2026. This includes features like client insights, AI anomaly detection, and advanced firm management tools. And you can go check out QuickBooks, Insightful Accountant, Future Firm, those types of platforms, and you can get some more details about that. We're not here to talk about the features. Maybe we'll do that on another episode, but that's what you'll be paying for. Things that I might want to pay for. Not super happy about paying $149 for it, but it was something we never had before. And some of the things that it does, we had to do manually. And I'm pretty sure if I run the math on it, we're paying more than $149. The big issue, I think, which everybody's probably should be a little bit upset about, is that their books close feature will cost you a fair amount of money. It will cost you $8 per client per month for the first 50. Once you hit over 50, it then becomes $6 per client per month. This turns the workflow management tool into a fairly pricey addition to your company. Tell the truth, at Protea, we're still trying to figure out if book close is something we want to even use. Not sure yet. We have moved it up the priority listing, understanding that we've only got a couple of months to figure it out if we want to use it. But that's what we're going to look at. And we'll figure out if $6 a month makes sense to us. I think what comes with it that people forget about is that the old Pro Advisor program is going to change as well. They're going to totally revamp it. There's going to be a new global partner program launched in January 2027, and it'll be integrated directly into the Accountant Suite. This changes the certifications, incentives, and ecosystem positioning. Honestly, the current system was pretty useless. We do the accreditation because we need to. We need that little badge, but our team generally doesn't feel like they learn much from it right now. They feel like it's more of a marketing tool than a learning tool, and we welcome the changes. And from what I've seen and heard and what they put out on Firm of the Future, I think it's going to be better. I think there's going to be a lot more value add and actual learning for your team members. A lot of positives. But Intuit is repositioning Accounting Suite as an integrated operating system for firms. So it's a total change in ecosystem. They're telling you that these capabilities are going to include AI-driven anomaly detection, centralized client management, AI agent delivery insight and recommendations, firm-level dashboards, or workflow automation. This is part of their broader strategy, which they kicked in a couple of years ago, which aligns with the AI investment and thus a monetization model. This got people upset. There were lots of industry-wide reactions based on the structural reality, not speculation. This is coming to the end of a free accountant platform. Even though core will remain free, many advanced features will be moved behind paywalls. Doing the math, if you want to use all the features and you have a 150 client firm, add $150 times 6 for books closed, that gives you $900 a month. The accelerator plan is going to cost you another $149. All of a sudden, you're at $1,049 per month. Now, it's a big number in our structure. It's not terrible. It's a pretty small percentage. But a lot of this stuff was free before. So this becomes an exceptional addition to your business. And if you're a smaller practice, this could be quite costly. There is this sort of sense that people don't like as well because they're going to be forced to Accounting Suite at some point in time. And people don't like change, even if it's for the better, even if they complained about the last one. So we'll see how people react to that. I think one of the things that really worries people is that it feels like Intuit's plan towards their software has changed significantly. Historically, the way people from the outside looking in, and this might even be fact, is that Intuit has monetized from the clients. So every client that we have pays a fee per month. That's how they make their money. Going into this new model that they're putting forward to us, they continue to monetize the client, and we continue to see a lot of price increases. They're now going to monetize the accountant. It could be free, but as we put an example out there, could cost you $1,000 a month. Additionally, there's going to be other charges for AI and other functionality as well. It looks like from the outside that Intuit are looking to ways to earn money in more places. Of course, that's what we get told all the time. How many different routes can you make money? As a business owner, how can you monetize your time? How can you monetize your expertise? But when a big corporate cousin does it, we get upset. And I get it. It sucks. It really does. It's a lot of extra money, especially if you're a small firm. And you're going to have to, do the assessment. Is this where I want to be? Do I want to go out and look at some of the competitors? Do I want to go use a different platform? Do I want to go somewhere where I believe they'll do it slightly differently? It's a tricky decision. For us, big believers in Intuit. We think they're a good platform. They provide our clients with all the needs they have for their GL. It's still a pretty open platform, and a lot of the tools that we like to use add into it. I know there's some changes coming there as well, but I don't have enough information to share on that. And we're still firmly behind Intuit, even with the potential of these extra costs coming our way. And I'm probably going to pay the $149 for the accelerated plan because there's a lot of things I really like in that. And, there's talk about a planning tool. I like that as well. I'm probably going to pay for that as well. It's okay. It's not ideal, especially halfway through my year. We only increase our billing rates to our clients once a year, and we make that decision in November. So any additional cost right now, that's straight off the bottom line for us. It is what it is. At the end of the day, I need tools that will help me run my business more efficiently and tools that will help me better serve my clients. I feel like the changes Intuit are making are doing that. And for me, if they are making me a better firm owner, a better accountant, and helping me serve my clients better, I'm okay to pay a little bit of money. And again, the only thing at the moment that I'm probably going to pay for is the $149 accelerator plan. I don't know about books closed. I don't know what type of value that is. I don't know if I need it to be successful. We'll figure it out. That's what we're going to do. We've got February, March, April, 2.5 months to figure it out. Even if I pay for it for a few months in some of my clients, not great, not ideal, but it will make a change. We need to do it. This is just what's going to happen. And I do have a choice, and you have a choice as well. You can go somewhere else. You don't have to stick around for this. I know it's hard. Changing software is difficult. Convincing clients to move is difficult, but you have to understand that this is happening. There's nothing we can do to stop it. I mean, we could all just walk It take a lot of us to do it, and pretty rapidly for them to really see the effect on the bottom line. But there is signals, the shifts in this whole accounting software. Intuit are very clear with us. They are trying to be an end-to-end system for businesses. They want to support accountants as much as possible, but ultimately businesses are their target audience. And they need to do what they need to do to make sure that they give them the best service. And that's why they'll continue doing weird things like opening brick and mortar tax services. That's why they'll have the little weird little ask your accountant thing. There's going to be these things. You have to remember their focus is helping the business owner. They do want the accountants to be part of that, but the ultimate strategy is to help the business. Come along, accountant, to be part of it. I know at times their messaging isn't great. I wish they would be a little bit more thoughtful in the way they do it. I sometimes think the timing is a little bit off. But we all do need to listen, pay attention, and understand that this is happening. This change is occurring. These are the facts. BOA is being retired. It will be gone at the end of December 2026. Go move to IAS right now. Remember, IAS Core is QBOA. It's all the same functionalities. So might as well get there, might as well get started right now. There is a paid plan coming, $149 per month, client insights, anomaly detection, and advanced firm management tools. I'll drop a link for exactly what that is. Books Close is going to cost you money. That's what it is. It's a tool. It's additional. It is not something we had in QuickBooks before. And they're saying, we believe it's good. We believe if it's worth something, we know it adds value. You have to pay for it. The big hope, though, is that they're replacing the Pro Advisor program. We hope it is better, more valuable, and helps us be better at helping our clients. There's been a lot of drama around this change, but we have to hope that it's either got a very small effect on our business or the tools we pay for will help us better run our business. We have a little bit of time to figure out, make this decision for ourselves. Remember, you do not have to use these paid for tools. You will still have sufficient ability to do your job as accountant without the 149 or the Books Close functionality. Focus on that you still have the same platform that you had before, and you can still be a valuable add to your clients. You need to make a decision where you want to spend your money. It does not have to be with Intuit. Go read Firm of the Future. Go look what's happening on the Intuit website. Stay up to date with that. I don't think this is all doom and gloom. I understand why it can give that gut feeling. Doesn't feel good. Feels like they're trying to grab money from us, doesn't feel like they care about us. But I don't really think that's that way. They're definitely trying to make more profits. I do think they're trying to work with accountants as much as possible. And I do think that things that they're building are value add. And if it was a third party outside of the Intuit world, it'd probably be worth paying for. I know it's where it comes from and makes it feel worse, but they are businesses at the end of the day. They're trying to make money. I know this has upset a lot of you, but I think we all just need to take a step back. Everything's going to be okay. IAS can be exactly what it was before, just a different interface. Remember, you can make a decision. You can stay in Intuit and go somewhere else. Personally, we've made the decision to stick with Intuit, believe in Intuit, and trust them as much as we can. We see them as a partner for our clients, for our business, and we hope we work together to continue to serve our clients to help them achieve great things. I hope you all have a great week. I'll talk to you next week.